I come to work every day because I get the opportunity to learn from some great people, great leaders, and great minds to further my knowledge and help customers make better agronomic decisions.
What makes me get up and go to work every day is knowing that I'm a part of a team that really cares about the service and the products that they offer to their customers and making sure that their customers have a great experience here at Liqui-Grow.
I enjoy getting to talk to customers, run equipment, and getting to work with other people.
Well, something that gets me up in the morning besides a good cup of coffee is the chance to add value to my customers. I really like working on something and seeing and measuring the results and understanding how that impacts their operation.
Working with growers every day and being part of their operation and being successful with them is great for me and them.
I want to make a difference, and what I am trained to help with is to meet the challenges of the future regarding growing more food on less acres, doing it more efficiently in a more sustainable manner. And that is a big challenge, and I get up and go to work every day to be a little part of solving those challenges.
What I like most about my job is the variety, whether it's working with customers, working in the shop, or being out in the field.
I love my job. I really love what I do, and people say if you truly love what you do, you'll never work a day in your life, and there's a lot of truth to that.
What would I say if someone asked me about joining the Liqui-Grow team? I would tell them if you want to be a part of a family-owned business that's close-knit, it's a growing company that's innovative and is on the cutting edge of agriculture, agricultural technology, and is making a difference when it comes to growing more food on less acres and being more environmentally sustainably and more efficient doing it, you're the right man or woman for the job. Come join us.
What I want someone to know if they're thinking about coming to work at Liqui-Grow is just about the relationships you'll build, whether it's internal or the customer base that we have.
It's a family-owned business. Scott and Hov are tremendous people to work for, and the staff at Liqui-Grow is outstanding. If you have questions, problems, you can call anybody.
There's multiple reasons why I like working for Liqui-Grow. The first thing is I can really tell that I work for a family-owned business. You know, one spring I got a handwritten note from Hub saying, hey, thanks for all your hard work. And, you know, that just shows me that my employer really values my time and my family's time. And the second thing would be is, as someone who's very new to the ag retail industry, I have a ton of support. I have Katie, I have Jake, and whether I have a question or I need help on something, they're always there to help.
At Liqui-Grow, there's a lot of freedom to further my knowledge, further the knowledge of my customers, and help make better agronomic decisions to help further their business.
If anybody was interested in coming to work at Liqui-Grow, I would definitely say it's worth taking the jump.
If you are looking for some growth opportunities, there is room to move and to grow in this organization. And if you are working with customers that need specific customized management strategies, it's not just a cookie cutter experience for everybody. We're really able to customize what farmers are looking for their own operations that makes sense for them.
What would I tell someone who wanted to work at Liqui-Grow? I would tell them I love the family atmosphere from the top down. Our Tipton location is really close. We're like a family there. It's a family-owned company. The Tinsmans are now on their third generation involved with Liqui-Grow. And we also have some locations that have multi-generational employees, myself included. My dad worked for Liqui-Grow for 33 years. I've worked at Liqui-Grow for 25, and who knows, maybe someday my son or daughters will work for Liqui-Grow.
Good morning. My name is Lisa Wurtzbacher, and welcome to Liqui-Grow Lead Academy. We're very happy you can join us today. We have an excellent presentation on tax planning and all things that you should be considering to limit your tax liability for small, mid-sized, privately owned businesses, and certainly farming operations as well. This is our last winter session. It's gone really well. We've had a ton of viewers. We appreciate you logging in. If you missed our sessions though, everything will be posted on our YouTube channel. So after today, everything's available and you can log on at any time to see our programming. In addition, the Lead Academy sessions qualify for CCA credits. There is a link listed in the chat so that you can self-report your training. And there's also going to be a QR code during the Q&A, and you can just use your phone to scan it. I met with Bill Dahl at Reiser Jennings in January, and I interviewed him about tax planning and recommendations for business owners of companies and farming operations of all sizes to get recommendations on how they can work to limit their tax liability. And we're going to present that video in just a few minutes, but I also have Dustin Kimball here with me today from Reiser Jennings. And he is going to be here to do Q&A after the video presentation. And both Dustin and Bill are extremely knowledgeable, and I think everybody watching this today and in the future is going to find this session really, really valuable. Maybe one of the best ones we'll do this winter. So if you have questions at any point in time, you can post them in the chat, which is right below the video that you're watching. And you can also use our email link, which is questions@liqui-grow.com. We're going to go to the presentation, and then we will come back at the end and we'll go live with Q&A with Dustin. So I hope you enjoy this, and we will see you afterwards. Okay, welcome back. I apologize, we're having a couple technical issues that we're going to continue to work through, but good news is we have Dustin here with us today, and we're going to get started asking him some questions, and some of the questions that I went through with Bill Dahl earlier. And you can still ask questions at any point in time, so feel free to send those in to us, and I'll be monitoring them on the YouTube chat. So, okay, first of all, thank you for being here.
Thank you. Thank you for having me.
Obviously a very busy time of the year for you guys, and so we appreciate you taking a break. But let's just start with that point. So we are getting into tax prep season. We are in the middle of February, and what are some things for people who are logging in today that you would say, hey, getting ready for taxes, if you haven't started, you know, first, second, third, what should they be getting started with?
Yeah, we are definitely into the thick of it now. With the pandemic, the last couple of years, the tax return deadline had been extended. You know, a couple of years ago it was extended a couple months, and last year was extended a month. This year we don't foresee that happening, so
Okay.
we're back to the old due dates. And for the farmers, as a general rule, they're due March 1st, which is right around the corner. So, you know, March 1st or April 15th, or actually it's April 18th this year because of a holiday, but those days are coming upon us quickly. So, yeah, we would urge everybody to reach out and get their tax appointments scheduled and, get the process started. We only have a month or two to go here, so.
Okay, good. What were some of the tax law changes that went into effect in 2021?
Well, there really hasn't been a lot of significant changes from 2020 to 2021. There was a lot of proposed stuff on the table that did not get passed. It's been kind of tabled at this point. There was some relief on some additional child tax credits. Iowa came along with the bonus depreciation for equipment purchases. Some minor things like that. But as a general rule, most of the tax incentives and stuff that was in place for 2020 is in place as well for 2021.
Okay, so let's talk a little bit about depreciation, because I really think for a lot of our viewers, that's a big one.
Yes.
For all businesses, really. Talk about the Iowa bonus depreciation, and then I'll have a couple other questions for you.
Yeah, well, with regards to depreciation, and obviously that's a big one when you come to farmers especially. Over the last several years, they've opened up a lot of options for depreciation. You have section 179, where you can basically write the piece of equipment off as long as you have profit. And then they also have bonus depreciation, which basically allows you to write a piece of equipment off in that initial year of purchase. The last several years since they've had this bonus depreciation, the state of Iowa did not go along with that. So you would have basically two sets of depreciation schedules. You'd have a federal one where you may take the bonus depreciation, one where you would have Iowa where you would just take regular depreciation. And this year Iowa has gone along with that bonus depreciation. So we have a lot of clients that's an option you have. You take that section 179 or that bonus depreciation, but I would stress that it's probably a case-by-case basis. Sometimes it doesn't make sense to write off all that equipment. You want to look at your individual situation. If it takes you out of a high tax bracket to a lower tax bracket, then yes, it might make sense to take that accelerated depreciation or at least part of it. But if you're using up lower tax brackets,
Right.
It might make sense to hold back some of that depreciation for future years.
Okay.
And another thing we always like to discuss with our clients is when we do write off, let's say, a big tractor or a big combine, make sure that if you're still making payments on that in the next 5 years or so, do you really want to write everything off up front when you're still having a lot of cash outflow with years to come? So there's a lot of situations like that we like to look at with each client.
Okay. And I'm going to ask some more about that, but you said case-by-case basis. So one of the things one of our owners said, we had a panel the other day and we talked about the economy. And he said farm income is the strongest he's seen in 30 years. So a lot of people were able to buy inputs, and the pricing was down, and then we had really, really strong grain prices last fall. And so farm income was strong, and then now inputs have gone up. And so grain prices will probably, we're hoping, stay strong, but the actual net income is going to shrink because they are paying a lot more for inputs this year than they did last year.
Yes.
So taking that into consideration, maybe thinking more about depreciation for 2021 versus 2022?
Yes, that's
Okay.
all. Yeah, look at each case individually, see how much crop you have that you're carrying over into the next year. Like you said, the rising input cost is definitely a factor. And it might make sense on some of these big pieces of equipment to, not write the whole thing off and spread that out over the next 5 years or 7 years or whatever. It's definitely something that should be considered. Most farmers are on a cash basis for tax purposes, so they do have an option to prepay things, which is always a big factor that comes into play. And that's one big thing we do at Reiser Jennings is we do a lot of planning, and we sit down with a lot of farmers towards the end of the year and say, okay, where exactly are you sitting at? Does it make sense to prepay a bunch of stuff or to defer income and things like that? So a kind of a combination of depreciation and prepaying expenses can kind of get you where you want to be, I think.
Okay, good. And just one last question about depreciation, although I'll probably ask more about it as we go on because it's something I think about a lot. But, I bought a combine, $150,000 piece of equipment. I obviously a lot of depreciation. So what are the options? Just, generally speaking, if you take it all, or if you don't, then what does that look like? How does that get scheduled out?
As a general rule, if you have the profit there, and you could write the whole thing off, you pretty much can write the
Okay.
whole thing off. And now, in the state of Iowa, let you take that whole thing as a deduction as well. So if you have $300,000 of income, you buy a $150,000 combine, you can write the whole thing off and lower your income.
Okay.
$150,000. The other option is, a lot of times you can pick and choose. The first year you put it in service, you have the option to decide how much of that you wanna write off.
Okay,
So maybe you're gonna write off 50,000 of that combine, and the other 100,000 you would spread out over the next 4 or 5 years. Is how you would normally take that.
Okay.
The first year you buy is the first year you buy it and put it in service is the where you have the option to pick and choose how much you wanna write off.
okay, so what if I bought a planter in December, but I'm not gonna use it until my first planting season in March?
It's supposed to be based on when it's placed in service.
Okay.
That's the year that it would fall on.
So it's not necessarily
So
when
we had
you
a lot
bought
of
it, but-
farmers
Yeah,
that were trying to
yeah.
get equipment and they couldn't get it by the end of the year.
Right,
So a
right.
lot of it was delayed into this year.
Okay,
Yes.
okay, or even if they got it at the very end, but they're not gonna be able to use it.
It was not in
So
service
now
yet.
they're looking for 20, okay.
Yep.
Okay, interesting, thank you. So we talked about some of the changes. Also, what about expected changes in the section 179 and depreciation tax law? Aren't there some schedules where this is going,
The bonus depreciation is scheduled, right now it's basically 100% write-off. But that is scheduled to phase back in 2 more years. They're gonna start to scale
Right.
that back. So instead of having 100%, then it's gonna drop down to 80% and then 60% and 40% until it eventually phases out. Again, this could change at any time if
Right.
they pass a new tax law or tax code is always subject to change. The section 179, they have bumped up the levels on that. That obviously could change as well, but I foresee that'll probably be, a good chunk of that'll probably stick around. The bonus depreciation I could see going out the door faster.
okay, but section 179, you're not concerned would expire at some point
I
in
don't
time?
see that expiring. They may even reduce the limits a little bit, but at this point, I think that's gonna be around. I think we're always gonna have some opportunity there.
Okay, okay. So we talked about 2021 tax law changes. What are we thinking for 2022? What changes are going to take place this year, or do you think they would start considering for this year or next year?
Well, the one thing that they were trying to push through that kind of got stalled was a change in the capital gain rates. They were looking to, right now, everybody pays, you pay a 0% capital gain rate up to a certain amount, and then you pay a 15% capital gain rate up until you get up to $500,000 of income, and then it jumps up to 20%. And the big push was to bump that up to where you're paying a little bit higher, tax on capital gains and investments and things like that. That was a big change that we thought something was gonna happen. The corporate rates, years ago, they lowered the corporation rates from 35% top tax down to a 21% flat tax. There's been talk that they're gonna start to push that back up, maybe to 24-25%. Again, that got tabled as well. Those are some of the most common things that we keep hearing thrown around. One other issue in regards to that corporation tax, when they lowered that corporation tax down to the 21%, they also brought in what is called this qualified business income deduction, which helps farmers and other small business owners, where you get basically a 20% deduction on your profit from the business or profit from the farm. So in theory, you're only paying tax on 80% of your income. It's a 20% deduction that comes through. That could be changed if they increase the corporate tax rates again. They may tweak that, or they may get rid of it altogether. Just a lot of unknowns right now. We don't know if anything will get passed, or if there'll be any substantial changes
Okay.
for 2022.
Okay, it's something everyone's keeping their eye on.
Correct, yeah.
Okay, thank you. We talked about this a little bit, but any temporary tax law changes that we're expecting to expire, anything besides the bonus depreciation that we're watching in Iowa? Well, child tax credits.
The child tax credit, everybody that's started to go and get their tax returns, if you have young kids, you probably got the letter. about the amount of the advanced child credits that you got in advance, and you gotta report those on your tax, returns. Those were, as part of this bill that was stalled right now, those were set to extend, and these advanced child credit payments were supposed to continue into 2022, but because that latest bill kind of stalled, they did stop and expire. So we're back to the old child tax credits of the $2,000 per kid under 17 for 2022. That was a big one that we saw that was going to continue on, and it has expired.
Okay.
Yeah.
Anything else?
That's really the biggest one.
Okay.
I mean, there's obviously some other more child-related stuff. They expanded the daycare credit. If you have kids in daycare, they've expanded that deduction quite a bit this year for 2021. So if you're getting your taxes done, make sure you take all your daycare and dependent care stuff in. That is set to expire again for 2022, but it was available in 2021.
Okay, great.
Yeah.
Thank you. I do have one question that came in here from the chat. Okay. We have all of the equipment that we need.
Yes.
Is there any other investment that you would recommend to help alleviate our tax bill?
The other biggest option you have, especially after the fact, when I say after the fact, we're already past the end of the year as we get to tax time, would be some type of retirement planning.
Okay.
If you have, you can do an IRA or potentially a SEP IRA, depending on your situation. With a SEP IRA, you might be able to put 25% of your profit away into a retirement plan. So that could be a significant help. These a lot of things are more after the fact. Long-term planning. You could set up a full-blown retirement plan, maybe like a 401k plan or a simple plan if you have employees and things like that. Obviously, we've talked about if you are cash basis going forward, you can revisit that and make sure you're prepaying anything possible that you would like. Other options or opportunities, again, thinking long-term, not necessarily that maybe not help you now as you're going to file your taxes, but if you are a farmer and you are consistently making large amounts of income, maybe switching to an S corporation might be a potential tax savings that you could look at and visit with your tax professional.
Okay, great. Thank you. Are there any lingering effects from PPP still hanging out there, or things that we need to be making sure we're documenting for tax prep?
Good question. I would definitely make sure, we have this conversation with all of our clients to make sure that, the majority of them did get one or sometimes two of the PPP loans. Just make sure you followed up with your banker. A lot of times the bankers are reaching out to the individuals and try, because the bankers want these loans off their books as well.
Right.
But for the most part, we're seeing that they're all are being forgiven. It's just a matter of you turning in your paperwork and getting those off your books. So that's definitely a good question, and I would reach out to everybody that has a PPP to make sure they got that notification from the bank that the loan has been taken care of and forgiven.
Okay.
Yes.
And do they need to have that for you at all to review? Do you review it? Do you need to review anything?
No.
Okay.
And all the PPP money, initially we thought it was gonna be taxable, but they decided kind of last minute that none of those funds are taxable. The main thing we like to check is sometimes, your record keeper or your bookkeeper may be counting the PPP as income. And we just wanna make sure you're not paying tax on that money, as it is not taxable income. So that would be a question to when did you receive that, or when did they book it to clear it off the books? We just want to make sure it's not getting recorded as taxable income.
Code it to the right account.
Correct.
Okay.
Yes.
Okay, good. Thank you. Switching gears a little bit, since we're in the second month of the year, what are 2 to 3 things that you would recommend to people watching today that they could put into place, best practices to make tax prep easier for them at the end of the year?
Well, I mean, one thing is the record keeping. We see a little bit of everything. We see people drop off their stuff with shoebox full of receipts to different spreadsheets or to QuickBooks. I would strongly suggest QuickBooks is kind of the small business software, which is going to be a good tool. There's a lot more to QuickBooks than people actually need to use. but it does do a good job of categorizing and recording your income and expenses. I've always said if you can get things recorded and you're balancing your bank rec every month, everything is there. Maybe it's not in the right spot, but at least it's there, and you have a good starting point. So you can look at maybe some tax planning opportunities down the line, rather than waiting till tax season and it's too late. So that's definitely one thing to consider. If you wanted to potentially change your entity structure, if you're self-employed and maybe you don't like that you're having to pay a large tax bill every year, you're paying a lot of Social Security and Medicare tax, or what they call self-employment tax, this might be the time of the year to consider an S corporation. In theory, you have until March 15th to make that election retroactive back to the first of the year.
Okay.
So that would be something that you maybe want to consider with your tax professional.
Okay, can you talk just a little bit more about that, changing status?
Yes.
And the differences and why somebody might do one or the other, just
Yeah.
give us.
If you're self-employed, or even if you're an LLC or a partnership, and you're active in that business, as a general, you pay income tax on the profit of the business, but you also pay Social Security and Medicare tax on the profit of that business as well. You might hear the term self-employment tax or things like that. When you become an S corporation, you only pay the Social Security and Medicare tax on the amount you pay yourself as a wage. So if you elect to become an S corporation, you take a salary, you become an employee of that S corporation. You have to pay yourself a wage, a reasonable wage, and you pay the Social Security and Medicare tax on that income, but you don't pay the Social Security and Medicare tax on the profit of the business.
Okay.
So it's definitely a good tool that you could look at to potentially save some income taxes.
So is revenue basically the key indicator of when you should make that transition?
Revenue's a part of it, but I would more look
Okay.
at the net profit.
Net profit, okay.
Obviously, if you're self-employed, everything is getting filed on your personal tax
Right.
return.
Right,
When
right.
you become to an S corporation, you have different tax returns to file. You might have payroll tax returns that you haven't had to file in the past. So there's definitely some additional costs and administration work, administration paperwork. So you gotta kind of weigh the pros and cons when it makes sense to make that jump.
And what about other household income? How much does that come into play?
Well, when you're an S corporation, it's all taxed on your personal return. So
Okay.
you gotta kind of see what tax bracket you are in. If it's a joint couple, obviously we're gonna add all that income together. But as a general rule, from an income tax standpoint, for being self-employed versus an S corporation, there's really not. It's all income is still reported on your personal return.
Okay.
Yeah.
So we've already talked about probably 5 different things that are big decisions to be made and should probably involve a tax professional.
Yes.
How often should a grower, a farmer who's watching today, how often should they be talking to their accountant or setting up a formal meeting to do some tax planning? How often, at what points throughout the year?
Definitely a good question. We with all the farmers we work with, to be honest, we have some that we keep touch on a monthly or quarterly basis because we're doing a lot of that. We're assisting with their bookkeeping or keeping track of their records. We have some farmers that just like to check in, maybe on a quarterly or twice a year basis, just to let us know how they're doing. But as a general rule, we usually meet with a lot of the farmers, the majority of the farmers, at least one time in the fall, October, November, when they have some free time after harvesting, just to kind of see where they're at. We don't, if they're going to have a surprise, we want them to have a surprise in the fall before the tax season is upon us. So they can make decisions on equipment purchases, or if they need to prepay some stuff, or maybe defer some crop and things like that. Or looking at retirement plan opportunities. If you knew going forward you wanted to set up a retirement plan, the off season might be that time to discuss that and get that plan in place.
Okay, good, thank you. Are there any labor-related tax laws that farmers should be paying attention to? A lot of these farms now are fairly large in size and they do have employees,
Sure.
even if it's just 2 or 3? What should they be paying attention to?
Yes, a good point. The biggest thing with employees versus independent contractors is always a kind of a hot button issue with the IRS, especially when it comes to farming operations, because you may have an individual or independent contractor that works for your farm and they might work for 2 or 3 other farms. So you are probably providing them a 1099, which is in that case makes the most sense. But if you are pretty much bringing employees on, as you said, like from the labor
Right.
force, and they're your employee, and you're telling them what to do on your farm, and you're telling them exactly when to work, and you're providing all their equipment and things like that, then you should probably treat them as an employee, and you should be paying payroll taxes for them, and filing W-2s and things like that. It's always a hot button item with the IRS,
Right.
is that 1099 versus that employee issue. So I would, definitely stress looking at that and reviewing that every year, just to see if you need, maybe they've been 1099 in the past, and maybe now you need to switch them over to employees.
Okay.
And making sure you're getting your 1099s done and filed. Those would have been due, at the end of last month.
Okay, yeah, right, February 1st
Yeah,
is the due date.
Yeah.
So really, when it comes to 1099 versus W-2, the key indicator is if you are setting hours for your employees or expecting them to be there for a certain part of the day from 7 to 3 or something,
Sure.
then the IRS would most likely look at them as a W-2.
That's correct. As a
Okay.
general rule, all those different factors come into play. They look at, like you said, are you setting the hours? Are you basically treating them as your employee? You're telling them exactly what to do. They're using your tools, your equipment. Maybe they're even using your trucks or things like that. Or are they an independent contractor where, like I said, maybe they're doing custom work on 3 or 4 different farms, and they want you have an agreement that they're going to do this, but they can kind of do it on their own time or on their own schedule. Maybe they're using their own equipment and things like that. Then you should have no issue issuing them a 1099 and keeping them that way on. It's called the part of the labor.
Okay, great example, because custom farming is becoming,
Sure.
more and more
Yes.
the norm, or, more and more part of harvest and planting every year. So
Yeah,
that's a
we're-
great example of a true contractor.
Yeah, it's not uncommon for the farm returns that we do. They get 3 or 4 1099s for just helping out on other farms. So we are seeing that a lot.
Okay. And you mentioned bookkeeping. I wanted to go back for that 1 minute. So if somebody is watching today and their operation, they're feeling a little overwhelmed about the bookkeeping and record keeping, that is something they could talk to their accountant
Yes.
about helping out with?
Yes.
Okay. Can you talk about that just briefly?
Yeah, I would definitely reach out to their accountant or like I said, there's all different levels of what maybe services they need. Maybe they're just getting bogged down on certain payroll
Okay.
stuff, or maybe they want somebody just to handle everything. Sometimes it's a matter of just getting a system in place, and maybe once the system's in place, then they're okay going forward or things like that. I know we all kind of live busy schedules, and especially farmers, certain times of the year, it's crazy for them to keep up on that bookkeeping and different things like that. I would just definitely reach out and see what that tax or that professional can help you get set up and get things going, just to ease some stress and make things more simple, for you going forward. And also that allows you to make good planning decisions. And maybe I need to buy a piece of equipment, but I don't have the money to buy that equipment, or I don't want to just buy that piece of equipment because I'm thinking I'm making money, but then when you get the books reconciled, no, I didn't make as much money as I did at this point. So we don't like people to just go buy equipment to buy equipment. We want to make sure they actually need that equipment.
And so if you're thinking about, if I'm watching today and I'm thinking about maybe it's time to outsource something, what would be one of the functions where it would be higher risk to do it in-house versus outsource? If you're looking at payroll or invoicing or accounts receivables or whatever, of those functions, what would be one that would help lower risk for the business of making a mistake or an error, one that you would say this is one we do most often for people?
Well, payroll is a big one because when you have employees and you withhold taxes from their checks, you are required by the state, by the IRS, to turn around and pay those taxes in on a timely basis and to file certain reports on a timely basis. And if you don't, you will get penalized, because the IRS knows that that's the employee's money that you haven't turned around and paid in timely. So it's not uncommon if you say your tax payment maybe for a month on payroll taxes is a $3,000 payment that is due the 15th of the month. If you miss that payment and it's all taxes being withheld out of the employee's check, that can be like a $300 penalty just for missing it by one day. So yeah, payroll is a good thing, and I can see we see a lot of clients get in trouble with that just because they don't quite understand it. And I think it's proper to get set up and get the proper motion in play. And then a lot of clients maybe can handle that when you kind of get things going and understand the process. But that definitely can be something that sneaks up on you. And again, the IRS and the states, they don't like it when you withhold a person's money from their check and you're missing that tax payment or you're not paying it in timely.
And also, it's not super expensive. I mean, we outsource our payroll with you guys,
Yes.
and it's cheap.
Yeah, and it just takes a lot of stress, one less thing to worry about.
So at least look into it. At
Correct.
least see what the cost is.
Correct.
To make a decision.
Correct.
Okay. I did get another question that came through on the chat, or through the email, talking about why someone would use an S Corp versus an LLC partnership, which I think we've addressed that, but if there's anything else you want to say, you can. But also, what are some strategies for passing on farms to the next generation? And any tax implications for timing around doing some of that?
Sure.
In phase, all at once, et cetera. I mean,
Sure.
whatever you want to say.
Well, first versus the partnership versus the S corporation. As a general rule, the partnership or an LLC is still subject to that Social Security and Medicare tax on the profit. Whereas if you were an S corporation, you can kind of limit some of that Social Security and Medicare tax because you're just going to pay out a certain wage to yourself. So you're still going to have some savings from the Social Security and Medicare standpoint of these S corporation. Now, farmland itself, I would never put into a corporation. It'd probably be okay to go into an S corporation, but as a general rule, if you own farmland that you're renting and things like that, an LLC would make sense. If your only source of income is collecting the rent and things like that.
Okay.
As far as farms and passing that generation to generation, you can obviously set up family limited partnerships or LLCs over time where you could gift ownership of that LLCs to the family. That's one tool. Sometimes it kind of goes involved with estate planning. And how much is a farmer's estate? If it approaches that, if it approaches that $13 million threshold, then we need to start getting things out of the estate to where we don't have to pay estate tax and things like that. The issue there though is if you are gifting a farm to your kids, or to maybe the kids or things like that, when you gift the farm to the kids, they take the carryover basis. So if this farm's been in the family for a long time, they might have bought this farm or inherited it at that time it was $500 an acre or less, and now it's worth $10,000 an acre or more.
Correct.
So if they gift the farm over to the family, they take whatever that carryover basis is.
Okay.
So what that means is if they gift say you gift a farm to the kids, and then 5 years from now the kids decide, hey, we don't want a farm, we want to sell it, they're going to have to pay a large capital gain on the sale of that farm. Whereas if they inherited that farm, if the parents own that farm until something happened and they passed, then the kids could get the step up in basis on that farm. And then when they go to sell it, they would not have to pay that large capital gain tax.
Okay.
So that could be something you got to keep in mind too as you're doing your succession planning and the plan is to get the farm to the kids. That's one tool, one thing to keep in mind as well.
So one thing I do want to talk about just a little bit, you mentioned the 13 million.
Yes.
Getting up to the $13 million threshold. For people watching today, can you talk about that and what they need to be aware of as far as, with the estate planning and the limits involved, and how do you manage that with spouses and so?
Yeah, well, every year, actually for this year, they upped it to $16,000 annual gift exclusion, which means you can give $16,000 to any person without having to, each year, without having to do any special filing or anything like that. So if you had a husband and wife that wanted to give their kids $16,000, they could do that and there would be no special paperwork. Actually, the mom could give the daughter A $16,000 and the dad could give daughter A $16,000. So you could actually pass $32,000 away without having any tax implications or any special file requirements or whatever. If you give more than that, if you give more than the annual exclusion, say you want to help them buy a house or something, or you want to help them give them a down payment for the house, so you want to say give them $50,000. Well, you can certainly do that with no tax implications, but you are supposed to file a gift tax return.
Okay.
A gift tax return basically, we'll go back up to the $13 million we're talking about. You are allowed to give away $13 million without having to pay any gift taxes. That either during your lifetime or when you pass. Okay? So you would, if you decided you wanted to give somebody $50,000 so they could buy a house or whatever, you could file a gift tax return, and that $50,000 would just come off that $13 million, leaving you with $12,950,000 left to give, or at the time of your death to use from the estate. Now the $13 million is per person, so together, husband and wife, it's $26 million. This is one of the things that we talk about, tax changes and potential things like that. Years ago, this used to be $500,000, and then they bumped it up, slowly it went up to a couple million, and then 3 million, and 5 million. It could go back down to 5 million or 10 million. We just don't know, but this is one of the things that is probably, could be something that could be changed in the future. So that's, that goes with the estate planning and make sure you're up to date on the current rules and things like that. But yeah, that's all things to consider in the gift of a farm or a family farm, or the value of, when you look at the estate value, there's some pretty large farms out here that are worth quite a bit of money. So definitely estate planning could be a big vehicle for them.
And this year, land is selling at record prices, and so
Correct.
they should, some people may be surprised at when they actually go to value the farm,
Yes.
at what the number, sometimes they could be caught off guard at what the actual number comes in at, correct?
That is correct, yes, yes. Yeah, the price of farmland has really gone through the roof again. So it's definitely something to keep in mind.
Take a look at.
And you don't want to, a lot of times if you want this family farm to stay in the family, you don't want to be in a position where the kids have to sell the farm to pay the estate tax.
If
they get over that threshold or things like that. So it's definitely part of the estate planning that you should keep track of.
Okay, and how soon should families start talking about this and looking into this?
Well, it's never too early, especially when you have kids and stuff involved. It's never too early to start and get a will in place. That's the first step to make sure your assets are going to where you want them to go if something would happen to the parents. And I would think you would work with an attorney to get that started. And then as your net worth and your assets continue to evolve, then that would be when you decide if you really need to dig into some heavy estate planning. What kind of assets do I have? Things like that. As a general rule, the majority of us aren't probably going to hit that $13 million or $26 million net worth. But there's going to be a handful of us that do, and there's still some planning opportunities below that level that could definitely help to making sure your money or your assets go to where you would like them to go.
Okay, great. Thank you. That's always a hot topic. Is there any tax laws that you want to review or discuss that's specifically unique to ag operations? We've talked a lot about it, but anything that you want to put out there, say, hey, FYI, just keep an eye on this?
Yeah, I think we've kind of reviewed most of them. The big things we run into are, the most like cash basis, making sure we got you prepaying expenses, but I see it a lot of times where, because they don't have their records maybe up to date, they're prepaying a lot of expenses. And sometimes they prepay more than they needed to, so it puts them into a loss position, which sometimes that reflects badly when you're trying to go to the bank to get a loan to buy that next piece of equipment. This year we are seeing some income up because of the higher prices and things. Just make sure you're taking advantage of that income averaging that's still out there, where you can spread your farm income over 3 years to potentially lower your tax bill. So we do see that come into play from time to time as well. But yeah, I think the key is don't wait until now. Have an idea where you're sitting at as you come into the end of the year so you can make some good decisions.
Okay,
Yeah.
great. Well, I appreciate it. We've gotten through all of the questions, and I know this turned out to be a little different than what we planned, but I think it went great. And honestly, you know, now we have two different perspectives from
Sure.
both you and your partner, and lots of good information. And we will get the video up later with our interview with Bill Dahl, who's another partner at Reiser Jennings. And so I do recommend that you go and you know, obviously you tuned in today for this, and I would watch that one as well because he does have some really good insights. I really enjoyed that conversation. So, but that's it for this year. For the winter sessions, I shouldn't say for this year, just for the winter sessions. I really appreciate everyone joining today, and thank you,
Sure.
Dustin, for being
Pleasure being
here
here.
and adjusting on the fly with us.
Yeah.
If you didn't get a chance to ask your question, the link, the email is always available. So you can send an email at any point in time, and you can also always contact your local Liqui-Grow rep. We have all of these resources available really at any time. We want to be a partner with you in your business, and so if you have questions, talk to your rep and they can reach out to us and we can get the right person involved to help you. We had a really great turnout this year at all of our Winter Lead Academy sessions, and we are going to continue to release programming throughout the year. And so, you know, watch our website, follow us on social media is probably the best thing to do. Definitely subscribe to our YouTube channel and keep in touch with your local rep because we will be posting programming dates throughout the year just to continue to put information out real time that we think is relevant and important for you to have in making the best decisions possible to run your farming operation. And so thank you again for tuning in, and good luck this year in the planting season.